A world-divided decoupling's impact on global trade. The term decoupling refers to the process of reducing economic interdependence between nations, particularly between the United States and China. This shift is not just a political maneuver but a significant economic transformation that is reshaping the global landscape. The global trade network, once a symbol of interconnectedness, is facing unprecedented strain. Ports that were once bustling with activity are now experiencing delays and disruptions. The seamless flow of goods that characterized the pre-decoupling era is becoming a thing of the past. The decoupling of the world's two largest economies, the United States and China, is reshaping the landscape of international commerce. This separation is not just a political statement but a fundamental shift in how businesses operate and how countries interact on the global stage. This separation has profound implications for businesses, consumers, and the global economy as a whole. Companies that once relied on a steady stream of imports and exports are now facing uncertainty. Consumers are beginning to feel the pinch as prices fluctuate and availability of goods becomes less predictable. The intricate web of trade relationships that has defined the post-Cold War era is unraveling. The once interwoven economies are now disentangling, leading to a reconfiguration of global supply chains. This unraveling is not just a logistical challenge, but a strategic one, as nations reassess their dependencies and alliances. The US and China, once deeply intertwined, are now pursuing divergent economic paths. This divergence is evident in the shifting focus of their manufacturing sectors, investment strategies, and trade policies. The economic graphs show a clear trend of separation, with each country looking to fortify its own economic base. This decoupling is driven by a complex interplay of factors, including strategic competition, national security concerns, and economic rivalry. Government officials are engaged in high-stakes meetings to navigate this new terrain, while military parades underscore the growing tensions. The stock markets reflect this rivalry, with fluctuations that mirror the uncertainty of the times. The consequences of this decoupling are far-reaching. Empty shelves in stores are becoming a common sight as supply chains are disrupted. Business executives are in crisis meetings, trying to find solutions to the challenges posed by this new reality. The aerial views of disrupted supply chains highlight the scale of the problem. Supply chains are being disrupted, forcing businesses to rethink their sourcing strategies. Companies are now looking for alternative suppliers and new ways to ensure the continuity of their operations. This rethinking is not just about finding new partners, but also about building more resilient and flexible supply chains. Manufacturing hubs are shifting, creating both opportunities and challenges for emerging economies. New manufacturing plants are being built in countries that were previously not major players in global trade. This shift is creating jobs and boosting local economies, but it also comes with its own set of challenges, including the need for infrastructure and skilled labor. The global trading system, already under pressure from protectionist sentiments, is facing its most significant test in decades. Protests against globalization are becoming more frequent, and traders on busy trading floors are feeling the stress. News headlines about trade wars are a daily occurrence, adding to the sense of uncertainty. As the world grapples with the consequences of US-China decoupling, it is essential to understand the forces at play and their potential impact. Economic analysts and international experts are engaged in roundtable discussions, trying to make sense of the situation. Animated infographics help to visualize the impact on global trade, making it easier to understand the complex dynamics at work. The decisions made today will shape the future of global trade and determine the winners and losers in this new economic order. Business leaders are making critical decisions that will have long-term implications. Future trade routes are being mapped out, and new technologies are being used to plan and optimize trade. The world is at a crossroads, and the path chosen will define the next era of global commerce. The rise of economic interdependence, a delicate balance. This balance has been a cornerstone of global economic stability, shaping the contours of international trade and diplomacy. The US-China economic relationship was not always characterized by tension and rivalry. In fact, there was a time when cooperation and mutual benefit were the defining features of their interactions. For decades, the two countries were bound together by a deep economic interdependence. This interdependence was built on the foundation of shared economic interests and the promise of mutual prosperity. China's rise as a global manufacturing powerhouse was facilitated by access to the vast US consumer market. American demand for affordable goods fueled China's industrial growth, creating a symbiotic relationship that benefited both nations. American companies, in turn, benefited from China's low-cost labor and efficient production capabilities. This allowed them to reduce costs, increase profits, and offer a wider range of products to consumers. This symbiotic relationship fueled economic growth in both countries and contributed to the rise of a globalized economy. The interconnectedness of their economies became a model for international trade and cooperation. However, this interdependence also created vulnerabilities. The intricate web of trade and economic ties meant that disruptions in one country could have far-reaching impacts on the other. As China's economic might grew, so too did concerns in the US about trade imbalances, intellectual property theft, and unfair competition. These issues began to strain the once cooperative relationship. The US began to view China's economic rise as a challenge to its own economic dominance and national security interests. This shift in perception was driven by fears of losing technological and economic superiority. This shift in perception marked a turning point in the US-China relationship, setting the stage for the trade war that would follow. The imposition of tariffs and other trade barriers signaled a new era of economic conflict. The delicate balance that had characterized the relationship for decades was broken, replaced by a growing sense of mistrust and competition. The once interdependent economies now found themselves at odds, navigating a complex and uncertain future. Trade wars and tariffs, escalating tensions. The simmering tensions between the US and China erupted into a full-blown trade war in 2018. The Trump administration imposed tariffs on billions of dollars worth of Chinese goods, citing concerns over unfair trade practices and intellectual property theft. China retaliated with tariffs of its own, targeting key American exports like soybeans and automobiles. The trade war escalated rapidly, with both sides imposing additional tariffs and engaging in a war of words. The trade war had a significant impact on both economies. US businesses faced higher costs for imported goods, while Chinese exporters struggled to find new markets for their products. The tariffs also disrupted global supply chains, leading to delays and increased costs for businesses around the world. The trade war highlighted the deep divisions between the US and China and the challenges of resolving them. It also underscored the interconnectedness of the global economy and the potential for economic conflicts to spill over into other areas. Section 4. Global supply chains under pressure navigating disruptions. The US-China trade war exposed the vulnerabilities of global supply chains that rely heavily on a single country. Businesses that had become accustomed to sourcing components and finished goods from China were forced to confront the risks of this dependence. The tariffs imposed by both countries disrupted the flow of goods across borders, leading to delays, shortages, and increased costs. Companies began to explore alternative sourcing options, diversifying their supply chains to reduce their reliance on China. This shift away from China is reshaping the global manufacturing landscape. Countries like Vietnam, Mexico, and India are emerging as alternative manufacturing hubs, attracting investment from companies seeking to reduce their exposure to the US-China trade war. The restructuring of global supply chains is a complex and ongoing process. It presents both opportunities and challenges for businesses as they navigate a more fragmented and uncertain global trade environment. Section 5. The search for alternatives, shifting manufacturing landscapes. The US-China decoupling is accelerating a trend that was already underway, the diversification of global supply chains. This shift is not just a reaction to geopolitical tensions, but also a strategic move by businesses to mitigate risks associated with over-reliance on a single country. The COVID-19 pandemic further highlighted the vulnerabilities in global supply chains, prompting companies to rethink their strategies. Businesses are increasingly looking beyond China for sourcing and manufacturing options, driven by a desire to reduce risk and improve resilience. They are exploring new markets and regions that can offer similar or even better advantages. This search for alternatives is reshaping the global manufacturing landscape, with companies evaluating factors such as cost, quality, and reliability. This shift is creating opportunities for emerging economies in Southeast Asia, South Asia, and Latin America. These regions are becoming attractive destinations for investment due to their competitive labor costs, growing industrial capabilities, and strategic locations. Countries in these regions are actively positioning themselves as viable alternatives to China, offering incentives to attract foreign investment. Countries like Vietnam, Bangladesh, and Mexico are attracting investment from companies seeking to diversify their sourcing and manufacturing operations. These nations are leveraging their strengths, such as a young and dynamic workforce, to become key players in the global supply chain. They are also investing in infrastructure and technology to enhance their manufacturing capabilities. These countries offer a combination of factors that make them attractive alternatives to China, including lower labor costs, favorable trade agreements, and a growing skilled workforce. Additionally, they are working on improving their business environments by streamlining regulations and enhancing transparency. This makes them more appealing to multinational corporations looking for stable and efficient production bases. However, they also face challenges in terms of infrastructure development, regulatory frameworks, and political stability. While these countries are making strides in improving their infrastructure, there is still a long way to go. Political instability and regulatory uncertainties can pose risks to businesses. Companies must carefully assess these factors when considering relocation or expansion. The diversification of global supply chains is a positive development in the long term, as it reduces reliance on a single country and promotes greater resilience in the face of disruptions. By spreading their operations across multiple regions, businesses can better manage risks and ensure continuity. This approach also fosters innovation and competition, driving improvements in quality and efficiency. However, it also creates challenges for businesses as they navigate a more complex and fragmented global trade environment. Companies must develop new strategies to manage this complexity, including investing in advanced technologies for supply chain management and building strong relationships with local partners. The evolving landscape requires agility and adaptability, but the potential rewards are significant for those who can successfully navigate these changes.